So I think this is vastly different from 2008. 2008, the banks were aggressively packaging and repackaging horrible loans. They were giving loans to everyone. They turn it into a package and they resell it to another group. So the bank between each other and the investment banks and the hedge funds, they had really bad garbage on the books. This time is very, very different. This time was a literal 1930s style run on the bank where the depositors, not the creditors, but the depositors said, we want our money out because we hear there's bad things going on. Now, yes, there are the two banks that you mentioned, and maybe a third one may not survive the weekend. They were making bad bets on interest rates, but it's certainly not a systemic crisis. I don't believe this is. I think this is a couple of banks who are trying to squeeze out some extra money from their depositors, the cash that they do. They do banking. So this doesn't seem like it's going to be any sort of systemic failure by the financial system, because at the heart of it, these banks were solid. They had great credit lines. Their banking, their balance sheets were very, very strong. This is just an old style run on the banks. I will do something, I can't believe I'm saying this. I think the Biden administration and the Federal Reserve did the right thing. In other words, they guaranteed the depositors money. So anyone walks in, whether you have under $250,000, which everyone would have been insured, or more, $1 million, up to $500 million in the case of Roku, they said, depositors, this wasn't your fault. We're going to make sure you're made whole. But the shareholders of the bank and the board of directors who own shares in the bank and jobs, we're not protecting you, and they let them fail. And that was the difference between this one and 2008. And I think they've thread the needle, I'll say, perfectly on this one.